Back to our guest. We're talking with Michael Gurka of Empower Global Funds. Also still with us, David Gertz of Highmark Capital Management. Gentlemen, let me ask you, we've had a lot going on this week. The testimony of Fed Chairman Ben Bernanke, some economic reports. David, I mean, what do you focus on most when it comes to kind of looking at where the market goes from here, and what's the best strategy play?
Well, in terms of leading indicators, for us, an early indicator back in December of '08 was what was happening with manufacturing, particularly the ISM survey. And as we've tracked through the green shoot story that has become stocks and now trees, we see a strong and robust America. Longer term, we are concerned about this notion that people have embraced the new normal, as people have talked about the subordination of the equity risk premium on one hand and the sub-potential growth on the other hand. We just don't buy those two stories. As we look forward, we believe that the American story is strong. And we're looking for signs of where the national champions are going to come from America in the next investment cycle. What is going to drive foreign direct investment flows into America? What is going to drive people wanting to invest in American companies? And we see a lot of very encouraging signs of innovation and development and productivity overall that is really going to make America very competitive. You know, you look at what's happening in Greece and you look at what's happening in Europe, and as we started off this segment talking about, these countries really aren't going to be competitive if their interest rates have to be at a premium.
Hey, what do you say, though, to Mohamed El-Erian's arguments for the new normal? I mean, you don't see higher taxes coming ahead? Do you not see more regulation? Do those things not concern you as an investor?
Absolutely, higher taxes concern us, and crowding out of deficits is also a big concern that increases the cost of capital. We think that there are stronger cyclical drivers in the intermediate term that are going to overwhelm those longer-term secular issues. Now the question is, will we actually get much, much higher taxes than are already baked into the expectations? And I think with some of the changes that we've seen, some of the elections that have already happening and the swinging of voter sentiment, I think it's become a more rational environment to think about Washington, and I probably would go as far to say as we've probably got gridlock between here and November because we're getting so close into the election season at this point.
All right, David, Michael, hold on for just a moment. I want to talk a little bit about another part of the market today that also saw some declines. Of course, stocks were down today. Crude oil, though, also fell. In fact, it was down the most in 3 weeks. And this was coming after some disappointing economic data. You had those U.S. jobless claims and manufacturing orders trailing forecasts. And that really kind of stirred concern that the recovery may falter and crimp energy demand. Well, let's talk a little bit about that. With us right now is Carl Lowry. He's the president of Oil Outlooks and Opinions. So, Carl, let me ask you, I mean, in terms of what happened with oil, it was down, I think, 3.7% at the low here. I mean, pretty obvious trade, disappointing economic news, worrying Greece. I mean, not surprising to see it pull back.
Yeah, I think that's what we're looking at now. I think we used to be correlated to the dollar, and now you're starting to see that. I think we talked about this a couple weeks ago. You're seeing just a move away from that, and now we're all focused on where the equity markets are going. It's all about growth right now, and that's kind of where oil prices are going to follow.
What about, I mean, the cold front that we've seen here in the Northeast? That usually tends to bump up oil prices a little bit. Someone said a blizzard isn't going to do this storm justice. It should be called a snow hurricane, and it looks like you've got one going on behind you as well.
A snurricane, actually.
A snurricane. I mean, is that already been priced in?
Well, you know what? I'm from Chicago, and I'm going to tell you one thing about snow. Snow means it's warm, and when it comes down, there's no snow, and it's high winds, and it's very Arctic air out there. That's when oil prices really reflect a difference. Snow's not a bad thing. So, at this point, it's so late in the season too. We're going to start discounting the heating season.
You know what, though, I'm noticing, Carl, if you take a look at the oil chart, I mean, we keep bumping up against that $80 a barrel level. I mean, what's it going to take to get over that mark, and do you expect it?
Oh, I definitely expect it, but it's it's tied into everything else we're talking about today. It's all about economic growth. Will we see more jobs created? Will we see more people driving, more people on the road? As it is now, the demand's high. I mean, better than most people think, and it's all based on consumerism. We're definitely seeing people out there. Retail sales numbers are good. Durable goods numbers, if you break them out, they're not that bad. But right now, all we're waiting on is jobs.
All right, we got to run. Hey, Carl, thanks so much. We appreciate it. Carl Lowry of Oil Outlooks and Opinions. Let's go back to our guests. Just a few seconds left here. We're talking with Michael Gurka and David Gertz. David, 30 seconds here. So when you look at the commodity trade, does that factor into maybe some of your strategy plays here?
Well, it does, and as we look at gold, oil, and industrial commodities, we'd break those three out into separate pieces. But as we look at oil, $65 marginal cost of production, we don't see a lot of upside to oil. Gold is overpriced at this point, but industrial commodities will feed into that driving force.
And Michael, 10 seconds here. In terms of the commodity trade, anything specific you're watching, just quickly?
I think there's a lot of anticipation that copper will continue to come off. And, hey, one of the reasons why demand's up for crude oil, everyone's driving around looking for a job.
Good point. All right, Michael Gurka, thank you so much of Empower Global Funds. Also, David Gertz of Highmark Capital Management.
We're going to take a quick break here on Bloomberg. Come back. We'll continue to talk about health care. We'll go